Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James of the Chart Guys. It is Tuesday, March 21st, going to do my nightly video on gold. So I was looking at the US dollar Japanese yen chart in my previous videos, and I said that we had a TCG bear cross here. And once we lost that 20 MA along with the TCG bear cross, I was pretty bearish on the US dollar Japanese yen and seeing the weakness there. And what a TCG bear cross is again, is when my 4 EMA, this green line, crosses under my 8 EMA, my red line here, and it's a very bearish technical indicator. And also on the daily, I had this uptrend line here, and once we broke under that uptrend line, it just further confirms as another technical indicator the weakness in the US dollar Japanese yen. And if you look at the weekly here, looking at the weekly US dollar Japanese yen, what we're seeing here is that when we pulled back previously, so we had this pullback here to the low of 111.58, 111.58, then we bounced there and then set another low here of 111.68. Now you can see clearly that the low of this weekly candle already is at 111.53, and by setting a lower low on the weekly time frame, breaking below this low, we've changed that trend of setting higher lows by setting a lower low on the weekly. And this further confirmed by breaking the previous low that it set on this pullback of 111.58. So on the weekly time frame, that is a bearish development. We'll see how that follows through at the close of the week. And looking at the gold chart, on the daily, so on the daily gold chart, same thing as the opposite of the US dollar Japanese yen. We had this TCG bull cross on the daily, and further confirmed by regaining this 20 MA yesterday at the close. I was saying I expected bulls to possibly show up after regaining this 20 MA, and I saw this declining volume that was a little bit concerning, because whenever you have moves up, you want the volume to really support that move up, which it wasn't doing. It was declining with the price of gold going higher. But today, obviously, bulls showed up with decent volume, good volume here, increasing. And another indicator that was bullish was that we had this inside candle. Again, inside candle is when the high and low of this of a candle is within the range of the high and low of the previous candle. Had a nice bull break by closing above the high of this candle yesterday of 1231.50, and you can see that bulls absolutely did show up today. So daily gold chart right now is bullish. The weekly bull chart has regained its bullishness by back testing the 20 MA here after gaining it as support and holding it twice, bouncing up and regaining the 4 and 8 EMAs here on the weekly, negating a TCG bear cross on the weekly. So the next resistance to look at on gold weekly in the midterm here, for the midterm trend, is, you can see this clearly, this 50 MA has rejected it twice, 1, 2. So you know that for the midterm to longer term, that gold has to get over this 50 MA on a weekly by the close. So we'll watch for that. You can see the volume on the weekly is still declining. Obviously, today's only second trading day in gold, so we have until Friday to get some more bull volume here and possibly try to retest this 50 MA as resistance. What to look for in gold tomorrow is, you can see that the that the hourly RSI was pretty overbought and it's pulling back on consolidation. On any pullback of consolidation, again, if the hourly gives you a TCG bear cross, watch for a back test with a 20 MA here. And if it successfully back tests and holds a 20 MA, wait for a TCG bull cross. And if you want a shorter time frame to look at these crosses, you can go to the 30-minute. Sometimes they'll give you the signal faster, so you could get on the 30-minute chart, you can get a TCG bear cross, back test the 20 MA, and then get a TCG bull cross on the 30 minutes. So I'm expecting some consolidation here overnight with gold bull showing up and having such a strong move. Now the miners are a little bit of a different story. So the miners at the end of the day, you can see all this profit taking and sell off, similar to what we had the day before on the profit taking. So a little bit more profit taking here, and the daily on the GDX chart and GDXJ chart are very similar. So we are holding the 20 MA here, still have a TCG bull cross. The 4 and 80 MA are getting above the 20 MA, which is another bullish indicator, but we're meeting resistance here at the daily 50 MA. And the last bounce attempt before we pulled back was rejected at the 50 MA. So that is a level we need to watch for here. The resistance to watch for tomorrow is obviously the high of today's candle of 23.51, and then break that and then keep this close of the 50 MA is what to watch for tomorrow. Same thing as GDXJ. GDXJ looked a little more bearish to me at the close just because of this much longer upper wick, potentially a bearish reversal pattern. And what I was watching for today was, again, we had an inside candle on the bull miners, GDX, GDXJ, Nugget, and JNUG, and we did open and close above the high of the inside candle. But what's concerning is this profit taking and rejection at the 50 MA here, and also because it was a gap up open. I don't like gap up opens on bull breaks of these inside candles because I've seen them be false signals before, so something to keep in mind. So you don't want to lose the 20 MA on any back test. So clearly we have 20 MA support on the daily and 50 MA resistance on the daily on both GDXJ and GDX. So for whichever one breaks first is the one that will win in the short-term future based on the daily. So break above the 50 MA and close above it. That's a victory for the bulls. Break below the 20 MA and close below it. Victory for the bears. So it's all something to watch for tomorrow. Have a good night, and I'll see you guys tomorrow.